everyone, and welcome to today's webinar, Important Changes to Federal Overtime Provisions. My name is Emily Sikulski, and I will be your host for today's webinar. The Trump administration just announced an increase in the minimum salary allowed for an employee to be classified as exempt. Starting January 1st, 2020, an employee earning less than $684 a week must be classified as non-exempt, have their time tracked, and be paid overtime. Failure to do so will result in a violation of federal government law. Before we begin, I would like to introduce our speakers, Claudia St. and Paige McAllister. They will be able to answer your questions throughout the program today, so if you would like to submit a question or have a question, please do so through the Q&A box. At this time, I want to pass it over to Claudia and Paige to kick us off. Go ahead.
Thank you, Emily. Before we get started, hi everybody. Thank you for joining us on this really exciting topic. I know you're just going to be so excited by everything we have to share. Before I get started, I would like to say a very special thank you to Emily and to Kevin Gammonley and the team over at SmithBucklin Association. They are the country's largest association management company, and many of the trade associations with which we partner are under their good guidance and support. So a super generous offering that they've made to host this opportunity for us today. So I'm Claudia St. I'm the president of Affinity HR Group. We are a national HR consulting firm, and I'll go into just a little bit about that. We are partnered with 17 national trade associations. Many of you, I hope, are on the call today. I'm joined by Paige McAllister, and she is our Vice President of Compliance. She is the amazing brains behind everything we do related to HR compliance. She is our resource, and I really don't make an answer or tell anybody anything unless I check it with her first, because she's the one who really knows everything. So you want to say hi, Paige?
Hi, and no pressure, but hi everyone. Nice to see you.
So Paige and I are going to tag team this this webinar today. We're going to go through about probably 30 minutes of content just to explain what's changed, what hasn't changed, what you need to know, and then we're going to take your questions, and we're going to take as many of them as we can. We'll notify you at the top of the hour. The last time we did this, which was in 2016, when the Obama administration had proposed some changes to the minimum salary to be considered exempt, that webinar went for an hour and a half. So we're going to try to keep it to 1 hour, but any questions that we don't answer within that time frame, we will get back to you with those answers. So please feel free, as we're going through, to ask your questions as we go along. Emily is right there. She's going to pop in and interrupt us, and so that we can take your questions as we go. Just a little bit about Affinity HR Group. So as I mentioned, we're a national HR consulting firm. We partner with trade associations. Our specialty is working with international trade associations to support their members, many of whom either they don't have a robust HR department, or whoever's doing HR may not be an HR professional. That's true for many distributors, for example, or they're a supplier and they're a very large organization and do have a robust HR function, but they may not have some of the things that we support. We support our member companies by providing HR policies and procedures. So that might be handbooks, answering your troubling questions, dealing with issues just like we're talking about today. That falls under Paige's responsibility. That's why she's in charge, and that's why I have her on this call today. We have recruiting and placement. That's with Lisa Ritchie, who's also on the call today, but she's hiding somewhere out there listening in. But we do active headhunting. We are specialists for headhunting within the association and industries that we represent, that the associations we work with represent. We also have a compensation practice, and we do organizational development and employee engagement and retention. So those are the four main areas, and some of those larger companies that we work with may not have a headhunting division within their company, or they may not have a compensation specialist on hand. So we're here to help you whether you're large or small. So we're very excited about this. These are some of the associations that we represent, or that we support, from the Car Wash Association to the Building Service Contractors to the Print Distributors and the tag and label manufacturers and everybody in between. So hope you're on here, and thank you for joining us. with that, I'm just going to get started. And again, I've got Paige on here. So Paige, please interrupt me if I say something, if something comes out of my mouth that is wrong or that is said in a way that makes no sense, because we all know that can happen. So in September, the Department of Labor issued a new ruling that in order to be considered exempt, employees must earn a new minimum salary, and the new minimum salary is going into effect January 1st, 2020. And that new minimum salary is that to be considered exempt, they have to earn at least $684 a week, or $35,568 a year. We're going to go into more specifics about that, but that's the essential change that's happened. But it does raise a lot of other questions, and that's what we want to talk with you about today. So as I said, the new minimum is going to be $35,568 or $684 a week in order to be considered exempt. The purpose of doing this is that this rule has not changed at all. The level that where it exists today, which is $23,660, or what was it, $455 a week, that has been in place for the last 15 years. And it hasn't kept up with inflation since it was instituted originally. By simply upping it to this new level, it's going to make 1.3 million Americans eligible for overtime pay going forward. These are people who are currently classified exempt but aren't earning this new minimum. So it has the potential to make many more people eligible for overtime. It's the first increase, as I said, in 15 years. Currently, at the current level, which I said is $23,350, that leaves a family of 4 living below the poverty level. And when we think about exempt versus non-exempt, we typically think of exempt employees, salaried employees, as being white collar, as having some level of white collar, higher level responsibility, education, autonomy, authority. So if these are people who are living below the poverty level and are classified in this way, it just really didn't make sense. Typically, and what the Obama administration had tried to do is bring it up so that 60% of the population would fall underneath this minimum to make the majority of workers eligible for overtime pay. This doesn't do this. This just sets it at the 20th percentile. So 80% of people will fall above this minimum economic threshold, but it sets it at the 20th percentile for the wages in the lowest wage census region, which is the South, and for the retail sector, which is among the lowest wage sectors in the United States. So this really is setting a new floor that going forward. Now, the Obama administration had proposed that it would increase automatically over time. This provision does not have that. This is just a simple, currently they're changing it and they're going to leave it for future legislation in order to change going forward. So how the rule works today. The Fair Labor Standards Act is the law of the land, and what it says is that workers are basically all workers are entitled to get minimum wage and to be eligible for overtime unless they qualify for an exemption, unless they're exempt from the law. And that's where non-exempt and exempt come in. If you're non-exempt, it means that you have to be covered under the rules of the Fair Labor Standards Act, which means you need to get overtime for anything worked over 40 hours in a week, or and a minimum wage. Now, many states have higher levels than this. If you are in California and you're on this webinar right now, you can probably go home because you're already paying much, much, much more than this. But I would encourage you to stay because there are some other provisions that we're going to talk about that may be relevant to you. But in many states, remember, we're talking the federal level. This sets the floor. You may be in a state that requires a higher level of payment or a higher duties test. So it sets 3 statutory requirements, the Fair Labor Standards Act, to be considered exempt. To be considered exempt from the under the white collar provisions. To be exempt from this overtime provision, to be exempt from the Fair Labor Standards, the provisions of the Fair Labor Standards Act, you need to get paid on a salary basis. So that's the same amount on whatever your weekly, bi-weekly, whatever your payment schedule is, you get the same amount throughout the year. Now, you can have a variable compensation provision of it, but your base salary is the same no matter how many hours you work, no matter when you punch in or punch out. And in fact, you don't need to punch in and punch out because you're guaranteed that salary. So it's a fixed predetermined salary. It has to meet, number one, the minimum salary requirements. Today, those minimum salary requirements are $455 or $23,660. And you must satisfy the duties test. The duties tests basically involve what are the duties of the job that you're performing that qualify you to be considered exempt under what we call the white-collar provisions of the Fair Labor Standards Act. We're going to spend some time on this today, even though nothing has changed in the duties test, because we know that many of our clients across all of the industries that we work, many classify their employees incorrectly. For example, the typical customer service representative, your typical CSR, they typically should not be classified as salaried. Now, we can't say that as a blanket statement. We have to look at their actual duties, but chances are they should be non-exempt, hourly, and eligible for overtime. Likewise, inside sales. So there are a lot of positions out there that people have classified as non-exempt, as exempt, because it's easier for our clients to have a predictable work schedule. But the law is the law, and what many of our clients don't realize is that they don't really have a choice in this. It's pretty clear. Well, it's not clear, but you need to look very carefully at the positions that you have classified as exempt, because oftentimes they're misclassified. Paige, jump in if you have anything that.
The only thing I would add to that is that the law also states that you have to do what benefits the employee. So if it's a gray area and you can't determine one way or the other, then you have to default, or you should default, to having them being non-exempt. So because that favors the employee. So that's where a lot of employees fall, is in that gray area. They kind of do this and we sometimes do that, and whatever. So with the duties test. So that's really an important thing to keep in mind when you're looking at the classification of employees.
Thanks. So moving forward, we're going to continue to talk about the duties test. Again, nothing's changed on it, but it's important for you to know because it creates the foundation of whether or not you have your employees classified correctly. The basic exemptions that fall under the white-collar provisions of the Fair Labor Standards Act are the executive, the administrative, the professional, the outside sales, the highly skilled, and the highly compensated exemptions. And I'm going to go through these and explain them so that you understand what the provisions are. And I'm also going to provide resources so that you can go back and follow up and do the check yourself, compared to the positions that that you've got classified as exempt. So for the executive exemption, these are basically the folks that we would consider managers, right? The people who are in some sort of a managerial profession, somebody who has a position of authority. They're higher up on the level of management within an organization, typically. In order for them to be considered exempt under the executive exemption, all of the following have to be met. All of the following provisions have to exist. The first is that they have to be paid on a salary basis at least $455 a week. So they have to get paid that. Going forward, they're going to have to get paid $684 a week going forward. The primary duty must be organized or managing the enterprise or a large subdivision or division within the enterprise. So actually managing those responsibilities and regularly direct the work of at least 2 or more other full-time employees. And then this is the kicker. Must also have the authority to hire and fire employees, to make recommendations about hiring, their advancement, their promotion, disciplinary changes. They basically have the authority to bring people on and let people go at their own discretion. So in order to be considered exempt under the exemption here, you have to meet that minimum salary threshold. That's what's going up in January, but you also have to satisfy all of these other duties. On the administrative exemption, again, we have the same requirement. They have to be paid on a salary basis, today of $455, but in the future, $684. And I should say that under the administrative exemption, this is where a lot of folks place their customer service reps place their receptionists, place their bookkeepers, their HR generalists, their underwriters if they're in the insurance world, their TPAs if they're in the pension world. So a lot of folks, when they classify their employees as exempt, that kind of level of exemption, they're not managers, but they're something else. This is usually the exemption that they fall under. So again, they're going to have to get paid at least $684 going forward, $455 today. Their primary duty must be performing some sort of office or non-manual work. So it can't be blue collar. Okay, so this is a white collar, pink collar type job where you have to be an office job working directly related to the management or general business of the operations of the employer or the employer's customers. And here's the kicker. The primary duty has to include the exercise of discretion and independent judgment with matters of significance. Matters of significance really is a financial responsibility. So you have to have the authority to commit the company to promises or obligations to other entities. So for example, you may have an underwriter, for example, at an insurance company, or a customer service rep at a distributorship. They may have the judgment of saying, you know, here's what we're going to do. We're going to price this at this level. But they don't really have the independent judgment to go outside of the pricing parameters that somebody else has set. So your customer service rep typically can't say, you know what, I'm going to give it to you for $500 and we're going to reduce our margin by X percent. I'm just going to do that for you. Most customer service reps don't have that discretion. Likewise, you know, an account manager or an account payable or accounts receivable clerk can't say, you know what, never mind. We're going to just waive that fee. You don't have to pay that. They typically don't have that authority and responsibility. They need to in order to be considered exempt under the executive exemption. Under the professional exemption, again, the same salary basis. They have to work with advanced knowledge, predominantly of intellectual character, which requires discretion and judgment, and advanced knowledge in a field of science or learning, and it must be acquired through prolonged course of specialized intellectual instruction. Think of the difference between an account clerk and a CPA or controller. A chef versus a cook. So these are the distinctions. If it requires learning, education, so for example, an HR generalist versus a VP of HR who has a degree and has that advanced certification, advanced requirement. So this does require more formal education of an intellectual nature in order to be considered exempt under the professional exemption. Now, outside sales, they have to be, their primary duty in sales is taking sales and obtaining orders and contracts and you know, taking care of things that are going, that the company is going to do on behalf of the customer, and must be customarily and regularly engaged away from the employer's place of business. So literally, you could be an outside sales rep, but if you're sitting at your desk in the office more than, you know, 20, 30, 40% of the time, you're not outside. You're not outside sales. Even if what you're doing is setting up those calls. They really are looking at this from the old-fashioned type outside sales rep where you are a road warrior and you're out making calls. A lot of folks have their inside sales rep as exempt because they're under this, but if they're sitting, if they show up every day and they sit at their desk and do their work, even if they're doing sales, even if they're doing outbound sales, they are not considered exempt under the outside sales exemption. But the one thing that's different about them is that they don't have the minimum salary threshold. So if they're classified correctly as outside sales, they do not have to meet that salary minimum. They can be on 100% commission. Paige, any clarifications to anything I've said so far?
No, I think you got it good so far.
Yay! Oh gosh, I'm excited about that. I take my delights where I can. For those of you who are unclear as to whether you've got your exemptions correctly, there are computer and highly compensated employees are also part of the exemptions. There's a whole bunch of exemptions. There are lots and lots and lots of exemptions. Google the DOL fact sheet number 17. And 17A through 17J spell out all of the different exemptions that are eligible under the Fair Labor Standards Act. We went through the ones that we went through recently because just then, because that's what most people are classifying that's the basis that most people are classifying their exempt employees under. So I encourage you to Google DOL fact sheet number 17. There are also certain funky things, like the Department of Labor issued a judgment on whether or not outside insurance agent producers are exempt or non-exempt. So the Department of Labor issued sort of a decision on that. There's lots of those out there. So if you don't have a clear, if reading the DOL fact sheet 17 doesn't answer your questions, give us a call, because we'd be happy to help you work through it and come up with what really is a best judgment. So the reason why we're spending so much time talking about these classifications is because this is going to be a big change effective January 1. And when it was announced under the Obama administration it was going to go up even more, a lot of people were like, wow, I could get overtime. I work 50 hours a week. I'd love to get 10 hours of overtime a week. That's going to be out there. And while it's kind of unlikely that a Department of Labor investigator is going to come knocking on your door, not impossible, definitely happens. But what's more likely to happen is one of your employees is going to hear about it on the news or read about it in the newspaper and be like, I'm misclassified. I should be considered non-exempt. Then you're going to be eligible for paying not only penalties on that position and back wages on that position going back 2 years, 3 years. They're also going to look at all the other positions in your organization that are the same position. So if you have 8 customer service reps and 1 person complains, they're going to go back and look at the exemption of all of your customer service reps. And these penalties can be very significant. You got to get this right, because you're only as safe as your last bad hire. That's where your biggest liability is. So just keep that in mind.
And on that, I'll add that this is something that the employees can't waive. So there are certain rights that employees can waive so that you can do a workaround. Wage and hour is not one of them. So if an employee says, don't worry about it, you don't have to pay me overtime or whatever, it doesn't matter. You still have to follow the law. They cannot waive their rights either verbally or in writing.
And a good example of that is, you know what, you don't have to pay me overtime. Just give me a day off instead. Give me some comp time instead. You can't do that, correct, Paige?
Right. Yes, right. Comp time is not allowed unless you're a public employer, like a government employer. So for most of us here in the private employers, comp time doing something like that is not allowed. And again, I mean,
it's allowed. You can give somebody comp time, but it can't be in lieu of the overtime that they
exactly. So you can't. Yes, you can't do that in lieu of paying somebody overtime, even if they would prefer it.
Got it. Thanks. And don't forget, all of you, as you're going through this, if you have questions, please type them in. Poor Emily's there waiting to just jump on it and interrupt us. We've been practicing our interrupting skills. So effective January 1st, 2020, there's no change to the duties test. So what the duties tests were before, the duties tests are going forward. The increase is going to up to $684 a week, or $35,356, $560. What was that? $684 a week, or $35,568 a year. So what that should mean to you, if you run your payroll and you've got anybody considered exempt on a salary basis earning less than this, you're going to need to come up with some decisions, because they cannot be paid that way going forward. That's your number one takeaway. So write this down. Run your payroll. Anybody earning less than this amount right here, you're going to need to figure out what to do with. A new provision that we don't have today, that doesn't exist today, is that up to 10% of this amount right here can be included in non-discretionary bonuses or commissions. That could be a sales commission, that could be a professional bonus, that could be a number of things that but it has to be non-discretionary. So you have to decide on it ahead of time, know how you're going to measure it, evaluate it, and then pay it. So it can't be at the end of the year, hey, good job, Steve, here's $500. That's discretionary. That cannot be included here. It has to be non-discretionary. And I'm going to go in a little bit more on this point. But this is basically what's changed. And for the highly compensated employees, you might have somebody who literally just pushes a broom. I want to be this person who pushes a broom around the building and would never be considered exempt under any of the exemptions that exist. But if they make today $100,000 a year, or going forward $107,432 a year, they can be considered exempt. So even if they don't meet any of the exemptions, if they make that much money, you may consider them exempt.
Claudia, we do have a few questions that just came in.
Great.
So one of the first questions is, all of these rules are for full-time employees, correct?
Well, they're for all employees.
Yeah.
So usually, if you're talking about somebody who's making a salary and who has to be paid overtime, you're looking at people who are working at least 40 hours a week, normally more. Usually part-time employees don't fit into these exempt categories, and since they don't meet that 40-hour threshold, you would have to worry about overtime. You still have to worry about minimum wage. But so that's why it's really, it applies to all employees, but obviously it's only going to impact those that would be ever close to working overtime.
So let's just flesh that out a little bit, Paige. So I'm a bookkeeper, okay, and I work 20 hours a week, and I get paid $320. That's $320 at 20 hours a week is going to be less than this minimum. Can they
that person would not be exempt because they're not going to meet the salary requirements. So, and honestly, as a bookkeeper, they probably wouldn't meet the duties test anyway. But it doesn't matter if they, how many hours they work, they still have to make that $684 a week. So even if somebody's part-time, but they would be classified exempt, they still would have to meet that $684 a week. It doesn't matter how many hours they're scheduled for, but to be exempt, that's how much they've got to pay, regardless of how many hours they work to make that salary.
So if I'm a bookkeeper and I'm making $800 a week, working 20 hours a week, that's okay for the salary, but it's not okay if you don't satisfy the duties test.
Duties, exactly.
Okay. What else you got, Emily?
The $684 a week is before taxes and deductions. Is that correct?
Correct.
Okay, perfect. For outside sales, I have always understood that they need to be away from the office, whether in your building or at a home office, at least 80% of the time. Is this not correct?
It's correct, but I don't know that there's a specific percentage. Like you can't take your day and divide it up and say 80%. But the vast majority, yes, has to be away from the office. Paige?
I'd say 80% is a good rule, but not hard and fast.
Yeah.
So it has to be a majority of the, if they're in the office 1 day a week and they're traveling 4 days a week or something like that, then that would, that should meet the requirements. But yeah, if they're working out of their home, even if that's not your place of business, but if they work in their home and they don't travel out to clients, then that does not qualify as outside exemption or outside sales, because their home office is then considered one of your branches, for lack of a better word.
Yep.
Got it. Thanks.
Great.
Another question that we have is, I guess you can set it up to not have any employee work overtime and stay within 40 hours. Is that correct?
Yes. Well, I mean, and we're going to talk about the options, so we're going to get there next. So yeah, you can set up your work week so that nobody earns anything over 40 hours. But here's the thing. You have to track their time, first of all, so that you know whether they've worked 40 hours. And if they do work over 40 hours, even if you didn't allow it, even if you didn't permit it, they never had your authority to do that. If they did, let's say they worked 44 hours, you have to pay them overtime for the 4 hours over. So even if you're not happy that they went over 40 hours, if they do, you have to pay them.
And
Okay.
we should also say this isn't within a typical, like, the office is open Monday through Friday. The Fair Labor Standards Act establishes a 7-day work week. You can make that whatever you want. It can be Sunday through Saturday. It can be Wednesday through Tuesday, whatever. But that's the set 7-day period that the Department of Labor will look at. So if an employee works for more than 40 hours within whatever that 7-day period is. So that really comes into like the weekends. If all of a sudden you have a special project or a client needs something or there's travel, let's say somebody's traveling outside of work hours, that's really where these employees who typically, never have overtime, you can get into trouble. So that's really an important distinction too, is that 7-day period that you're looking at.
And we'll explain a little bit more about some options, because it doesn't mean that you can't pay them a salary, and it doesn't mean that you can't set a work week that's lower than 40 hours to make sure you don't get close to bumping into that overtime. But if you do bump into that overtime, you got to pay it, whether you like it or not. Then it can become a disciplinary issue.
A few more questions that we have is, can you put inside sales fully on commission and not worry about overtime?
No.
No.
No, no, they're basically inside sales. Sorry, Emily, I know you're disappointed.
Sorry.
You sounded so disappointed. But no, basically inside sales is not exempt. So that means you have to pay them for any time worked. You can pay their commission can make up a part of their salary going forward, but it can't make up more than 10%. So you have to give them at least, and actually that's a great transition to the next slide. So I'm just gonna go to the next slide because it will help us answer this question, and then I'll see what else you have. So basically today it's $455 a week or $23,660 a year, period. So they have to make at least that much. Now it is this new salary going forward, but up to 10% can be non-discretionary. That means for your inside salesperson, you have to pay them at least $616 a week, and they have to get at least I'm so bad with numbers, $3,556 in bonus. You can pay them more than that. You can pay them $5,000 a year in bonus above that, but they have to make that $616 a week or $32,011. So all your inside sales should at least make that plus that bonus. But here's the thing, your inside sales can't be considered exempt anyway. We know that. So you can bring them up to satisfy the salary threshold. They're still not going to satisfy the exemption. So sorry.
Sounds good. No, that's all right. It's a helpful answer. Another question that we do have, actually a few more. Does it make a difference how many employees you have?
No. Nope.
Okay. One question that we do have is, in the automotive service industry, we have store managers and customer service representatives that have primary duties of dealing with clients, estimating repairs and selling repairs. They also may manage technicians and others. In the case of oil change managers, where they actually do work or service is required, would this typically satisfy the duties test for a salary position?
I'm going to answer, and then I'm going to let Paige answer. If they are hiring and firing at their own will, if they're managing their own staff, if they are making the decisions of estimating not within your guidelines but within the field of their own expertise, if they have that autonomy, I think a good case could be made that they would be in a position to do that. Customer service, not so, however. Usually just because they're client-facing or customer-facing doesn't mean that they can really engage in, for example, my oil change, who is a good solid AOCA member, by the way, when I go there, the manager who's overseeing the shop floor and is sort of making sure everything's going on, he probably would be classified as a manager. But the woman who checks me in and then gets the material and then checks me out and talks about any issues we have and any follow-up and makes recommendations for me on whatever oil I should buy and when I should get my tires rotated, she probably would not qualify as the exemption because she's really working within the purview of her job and doesn't satisfy those exemption requirements.
Yeah, I mean, not much to add on that. It isn't, just because they make sales or make recommendations or things like that, that usually isn't to the level of independent discretion and matters of significance. It may be, but usually those people are high enough up, like the store managers, they're making bigger decisions outside of just the customers and things like that. So as you go farther down, you probably won't see it, even if they're like given a bonus for selling X number of, upgrades. That's not, that isn't something that usually is exempt.
Okay. Well, Scott.
Let's see. Will we be able to share the slide deck with all attendees after today's program?
Oh, absolutely. Happy to do that. And I think this is being recorded, correct?
Correct. So I'll be able to share that recording link with everyone as well. Perfect. How does paying an outside salesperson draw against commission play into this ruling? Would the minimum salary requirement be a guideline for setting the draw?
No. So you can determine that however you see fit. That really is an independent discussion that you can have with that employee. Again, the draw is, if you're basing the draw on this, you're basically setting the draw at the 20th percentile for the lowest wage region in the United States. That may be okay. It may not be okay based on, who you're trying to hire and what you're trying to negotiate. As long as they're true outside sales reps and they are out there and they are on the road and they are doing their thing, you can set that minimum salary or draw wherever you want to, because you can put them on 100%. If they will accept 100% commission, you can put them on 100% commission. So that's really a decision for you to make.
And with outside sales, since there isn't that that minimum requirement, you can also do it. I've seen a lot of companies do a phase-in. Mm-hmm. So they may start off with the salary and small commission, and then phase in so the salary gets reduced and the commission increases over a period of time. So you can certainly do something like that, especially with outside sales. And again, outside sales, the draws and things like that, that from what we're talking about here is exemption, that doesn't matter.
I'm going to hold off just to because these sound like really good and sort of general questions. So let me just get through a couple more slides and then we'll take the rest of these as we go along, if that's okay, Emily.
Perfect.
Great. Okay, so basically, again, here, this is what's changing. What's changing is the salary threshold's going up, but now we have this opportunity for the 10% of that salary to be in non-discretionary bonuses. So now I want to talk about what non-discretionary bonuses are. They can be paid through bonuses, incentive pay, or some kind of commission. Again, these are things that are determined in advance. They're not just sort of, hey, I just want to give this to you. It's sort of, what are your goals in terms of sales, in terms of key performance indicators, satisfaction, whatever it is, you're going to provide that bonus or that incentive or that commission. It's spelled out in advance, and you know what it is in advance. It's predictable, so it's not discretionary at all. It has to be paid at least annually or on a more frequent basis. So that means you can pay that bonus at the end of the year, or you can pay that bonus quarterly, you can pay that bonus monthly, you can pay that bonus weekly. But at the end of the year, it has to be that minimum $3,556, which is that 10% of the salary. You have to pay them at least that. So employers, if let's say at the end of the year, you've been giving them a bonus and you realize, they only made $3,000 in total commission, and so now we're short $556 in order to get them up to that minimum level. You're going to have one pay period at the end of your 52-week pay period, at the end of your year. So if it's a fiscal year, whatever it is, or if it's a calendar year, you're only going to get one pay period to make that up, to make up that shortfall. If you don't make up that shortfall, you're going to have to go back and pay them all of the overtime and classify them as non-exempt and pay them their pay as if they were non-exempt. So you're going to have to reclassify them as non-exempt and look back and give them what they would have been owed. Big freaking nightmare. Do not do that. So what you want to do is make sure there's no question you're going to hit it out of the park, that they at least get $616 a week, and you know that commission is going to be nowhere near what, you know, the $3,556. So don't try and get it right to that 10%. If you think you're going to be close, if you think this is going to be a squeaker, don't do it, because the repercussions of doing it that way are going to be a nightmare. The makeup pay counts toward the, so let's say in January, it turns out you were short $1,000, right? So you gave that employee $1,000 to make up that pay. That $1,000 applies to the last year. You can't apply it. So let's say in January 2020 or January 2021, you give them $1,000 in order to satisfy that makeup. You can't then apply that $1,000 for your 2021 bonus. It only applies to the year that passes. And if you don't make it up, as I said before, the employee would be entitled to overtime hours worked during the previous 52 years, or 52-week period. All right. So with that, what's an employer to do? Well, here are some options for you to consider. First of all, you want to go through and figure out who is the new, who falls under that. Okay, so the first is you can go in and run your payroll report, see anybody who's falling under that $35,568 and bump them up. Okay, so that's the easiest thing to do. Take that salary, bump them up. Again, make sure that they also satisfy the duties test. It's not just the minimum salary, it's also the duties test. So bump them up if you're sure that they warrant being exempt, or reclassify them as non-exempt and keep them where they are. So now they would be considered non-exempt. You would need to track their pay, track their hours, pay them on an hourly basis, make sure they're earning the minimum salary that's here, and that they're eligible for overtime for any hours worked in excess of 40 hours in a work week. Or you could reclassify them as non-exempt, but you can still pay them a salary. What you would do is treat them as non-exempt, pay them a salary, but you still need to track their hours. So what oftentimes folks will do is they will figure out what their hourly rate is at their lower level, pay them a salary based on a 37-hour work week, and track their hours. And then that salary is what they earn for that work week. But if they work anything more than 40 hours in that week, you take the hourly piece of that salary and you pay time and a half on it. That sounded a little confusing, but basically you can still treat them as salaried and pay them on a salary basis, but you still have to track their time and pay them overtime for any time worked in excess of 40 hours. Or you can reclassify them to non-exempt, redistribute their job duties that might classify them as exempt, and then set the full-time hours below the 40-hour work week, which is what I just mentioned. We do generally recommend that you do set a work week below 40 hours, because that gives time a little bit of flexibility. You know, if I've got to run out to the doctor, or I'm going to work an extra half hour late, or I'm cranking on a deadline, if you have a little bit of room in your work week, then you're not going to be bumping up against that 40 hours all the time and then always being paid overtime. Because if they work anything over 40 hours, again, whether you like it or not, you got to pay them by law. You can, of course, treat it as a disciplinary issue because they didn't follow your requests. This is also an issue for those of you that have customer service reps who are classified as non-exempt, and they're at home checking their emails in the middle of the night. If they're doing any work on your behalf, whether they're in their pajamas from their living room or not, you need to pay them for that time. So you need to make sure that your expectations of what they work, when they work, and tracking how much they work, you have in hand so that you can make sure you're compliant with this law. So things to remember: you still have to satisfy the duties test. That's not changed, and it's a common mistake. How you communicate this to employees is important. Reclassifying exempt employees to non-exempt can often feel like a demotion. It can often feel like they're not at a level anymore to be considered a professional within your organization, and it can hurt. It can hurt. Being very clear that this is not your choice, that this is a federal law that's been put in place that you have to comply with, but trying to make it so that perhaps they still can have a salary, and you've set it up so that they're treated from all intents and purposes like an exempt employee is important, but having that open communication is going to be important, and what you intend to do in order to satisfy this requirement. Again, tracking soft time is going to count, and it counts today. It always counts. If they're working on their own time wherever they are, you need to pay them for that. So you need to come up with a strategy for how to do that. For those folks that are going to be reclassified as non-exempt, training and managing how they track their time and how they manage their time is going to be a new duty. So that's something you also need to make sure your supervisors and managers are well trained for. And again, you're only as safe as your last bad hire. So here are the resources. If you just Google the DOL overtime, they have a lot of questions and answers for you to go through. Happy to go through them with you as well if you have questions. And of course, we'll answer them here, but you can always contact us afterward. And again, that fact sheet 17A is a great resource for you to figure out the duties test. So this DOL on the left-hand side, that really explains what this new change is in terms of the minimum salary, what qualifies for it, what counts toward it, what it looks like some of those questions. And then the fact sheet 17 is going to be for the duties test. with that, Paige, before we get any closer or we go any further, any thoughts on what I've said about like strategies and things of that sort?
No, I think it's good. I think one thing just to reemphasize, which I think you mentioned towards the beginning, but when we're talking about an exempt employee's salary, it's a wage guarantee. So it's not impacted by how many hours they work. So that's really the main difference with a salary. It should be something that somebody expects. Even if they're non-exempt, you have a little bit more leeway if you're reducing it, but really a salary is a wage guarantee. So if you're going to have somebody who's non-exempt and salaried, if they work 35 hours, if they work 38 hours, it usually doesn't matter. That salary should cover it. As I said, there's some exceptions to that and a little bit more leeway if somebody is non-exempt. But that really is, if you go by the salary as a wage guarantee, that really goes by why we always recommend if somebody's non-exempt, it's just easier to have them tracked as hourly because you've got to track their time anyway. And if you're going to have to, you might as well just pay them for the time that they're only the time that they're working. If you're going to have to pay overtime anyway, then you might as well just pay, have that fluctuation. So if they're working less than, in a week, you don't have to pay them more based on a salary.
We have had clients, and I've talked to clients about that, who say that the employees like having some predictability, like knowing that they're going to have a certain guaranteed amount every week. And so a lot of employers, even though they have to track their time anyway, will go toward that salary. But you're right. If you go that route, it's a guarantee. You can't pay them less. You have to pay them that amount. That's what they get. And then if they're over 40 hours, then they get that overtime pay.
Right.
Excellent. Okay, Emily, what you got?
I got a few things. What about 100% commission outside sales rep who make less than $35,568 a year? Would they be exempt?
They're already exempt. If they are a full service, if they are a full functioning outside sales rep, road warrior, not working in the office, fulfilling a typical sales job, they don't have a minimum, so you can pay them less.
Got it. Next question, what's the purpose of paying salary if you still have to track time and pay for overtime? Why not keep it at hourly?
So that was the conversation that Paige and I just engaged in. So, yes, I mean, for two reasons, basically. One is that maybe the employee really wants that and the employer want that, and they like just having that predictability of it. Or it could also be somebody's really upset about the fact that they have to be now classified as not exempt when they were exempt before. There can be some morale and employee engagement issues with that as well. Those are usually the two main reasons why somebody would want to do that. It's just easier, if you're going to track their time, it's just easier to pay them for the time that they actually work. But that would be the reason why some folks would consider salary.
Okay. If you don't want to put certain employees on a time clock now due to the change, while others remain salaried, it becomes obvious who is paid what within the office. What level of responsibility can be placed on the employee such that they self-report hours, including soft hours or time put in away from the office, like emails, basically enough to close out the risk that they come back and later claim unpaid overtime owed? A certification they sign on their time slip, for example.
So my answer is going to be yes, they can do that, and you can do that self-reporting, but it can't just be an email that they send or an Excel spreadsheet that they send, and it's 37.5 hours, 37.5 hours, 37.5 hours every week. It has to actually be the amount of time that they actually worked. And there are a lot of ways of doing it. There are a lot of systems to do this. There are lots of phone apps for recording. It doesn't have, you don't have to go into the break room and go ka-chink in order to, track your time anymore. You can have a more discrete process for it, and it can be a self-reporting, but again, it has to actually be reflective of the actual hours that they worked. It can't just be a pro forma. Paige, am I right?
Yes, and it does. There's no law as to how you track time, although the Department of Labor actually offers a couple of formats if you need to get started on something. But there's also a lot of software, whatever. I used to track my time in an Excel spreadsheet. I mean, it really is however you want to do it. The important thing is that it is exact time worked. Have the employee sign off on it so that if they do come back and say, well, I worked more than that, you can go back to their signature and say, well, we paid you based on what you submitted, and just make sure that it is accurate to the best of your knowledge. So that if they're sending, they say they worked 8 a.m. and clocked out at 5 p.m., but if you know that you received emails from them at 7 p.m. at night, you now know that they're working. So you are going to be responsible for that. So that is something you would have them add to their timesheet. You'd have to pay them accordingly, but you can discipline them and say, hey, we appreciate your effort, but we really want to, your time off is your time off. It's a very important policy to state very clearly that the company does not allow off-the-clock work. So that you make sure that your managers and your supervisors uphold that. So that's kind of it takes a little bit of investigation, but if you have somebody who always walks in at 8 o'clock and always walks out at 5 p.m. and they never do anything outside of that, and that's what they submit and they sign off on it, then you should be good. But again, if there's any reason that you should know of something different, then you need to pay them. You need to pay them what they actually work.
And another point on that is that if you currently have all of your folks as exempt and now you realize, I've got to reclassify them, you're going to have to figure out a lot of stuff. There's a lot of stuff that you have to figure out in terms of how you pay overtime, what you pay overtime on, if you've got commissioned employees or you've got folks who are earning some sort of an incentive pay throughout the week, how you calculate overtime based on those things, and also what's compensable. Do you have to pay for them driving to a client? Do you have to pay for them when they show up at work? Well, do you have to pay for them if they show up and clock in and go and get lunch versus they clock in and have to put on all of their uniform in order to operate your oil change or your car wash? Do you have to pay for that time? There's a lot. I mean, it's horrible, all the details that have to go in with tracking time and compensation. So that's why we have Paige. So if you have any questions, you ask her. But there are also a lot of guidance about that on the Department of Labor website. They do have a lot of helpful fact sheets and things, questions and answers on that sort of thing.
Another question that we have is, if a manager helps out when it's busy or covers a clerk that calls off, does that violate the duties test?
No, it does not. Because basically a manager gets to do it because they choose to. We all do non-exempt work, right? There are managers, there are executives, there are presidents of company who have to type things or file things or make a phone call. So just because it's a non-exempt action doesn't negate an exemption with a duties test. You don't have to be exempt duties 100% of the time, but basically you have to control it. So it's not the majority part of their job. They're stepping in when they have to, and but they get to choose that when they do that non-exempt work.
And I think on that point, this is where it gets a little gray, right? So if you have somebody who the majority of their duties is doing the non-exempt work, but they do some of the exempt stuff, what's enough to satisfy that? That's where it's really nuanced, and that's where you really do need to look at the totality. Does it walk like a duck? Does it talk like a duck kind of assessment? So again, we can't just say all customer service reps should be considered as non-exempt. Some do have some of those executive functions, those administrative functions that may qualify and classify them for non-exempt, but the vast majority that we come across don't. So that's why you really have to look.
Right, and you just like you can't go by a job title. So
or job description. Yeah.
It has to be the duties. So for example, what I've come across a lot are a lot of assistant managers who are actually, they've got the manager in the title, but they really don't have a lot of discretion. They don't really have that executive power. They just basically can open and close the shop, which may not be enough for them to be exempt. So where a store manager usually is, an assistant manager may not be. That's one of those positions where I found that are very gray. So you have, so there, and that's just an example, but there's a lot of those positions that are in that gray area that we talked about.
Another question that we have is, I have a part-time employee who is non-exempt. I have her on a salary pay, meaning she gets the same amount every week. I do not have her tracking her hours. I believe, based on the information from this webinar, I need to change her to be tracking her hours at the beginning of the year. Is that correct?
Yes, or sooner. Again, if she's a part-time employee but truly doing exempt work, maybe, perhaps, maybe she's doing legal work for you and she's only working part-time, that would qualify her to be non-exempt. You would just need to pay her, at least $684 a week. If you suspect that she's not doing exempt work, then yes, you need to reclassify her and pay her on an hourly basis, at least minimum wage, and any overtime for any time over 40 hours.
And you don't have to pay her hourly. If she likes this salary arrangement and you like the salary arrangement, that's totally fine. But if she is non-exempt, you do need to track her time, and that's an important distinction. There's a distinction between salary and hourly, which you as a company decide how somebody's paid, and exempt, non-exempt, which is based on these regulations that we talked about. So the terms are not interchangeable. They actually do mean different things. So just because somebody's salary doesn't mean they're exempt, and vice versa. But if you, as I said, so if somebody's salaried and non-exempt and part-time, while you're probably meeting minimum wage and overtime, you need to still track the time just to be sure, especially if they're 35-hour part-time. If there's somebody who's a 15-hour part-time person, tracking time is still a good idea, but you don't have to worry about minimum wage and overtime. But the Fair Labor Standards Act requires all non-exempt employees, all the companies, to track all time for non-exempt employees. So it doesn't matter. If they're non-exempt, you need to track their time.
Thank you for that clarification. A few more questions here. How about MIS employees? Meets new minimum pay but does not hire employees or supervise anyone.
MIS employees. I'm not familiar with what that acronym is, but if they don't satisfy the exemptions here, if you don't see this person's roles and responsibilities in any of those exemptions that I explained earlier, go to the Department of Labor, check it out and see. But if you don't see this person classified in any of those things, they probably should be classified as non-exempt.
Thank you. I think one of the last questions that we have now that we are at the top of the hour, so if anybody does need to head to another meeting, we appreciate you being on. But if some people would like to stick around and have a few more questions, feel free to submit those at this time.
Great.
The next question that we have, Claudia and Paige, is would an employer's taxable benefits stipend free for the employee to use towards whatever benefits on tax advantages basis, or even just cash out as additional taxable pay, count along with regular salary in the meeting in the new 35,568 minimum?
So typically, yeah, if you're talking like 401k contribution or benefit contribution or a contribution toward a cafeteria plan or something of that sort, that does not qualify as pay. It actually has to be compensation pay.
Okay. I think a follow-up to that question they have is it saying that if you utilize 90% of the salary and offer a 10% non-discretionary bonus or commission, and the employee fails to perform on whatever would earn that 10% within a pay period, do you still have to pay that 10% if they didn't earn it?
Not in the pay period, so you can wait until the very end of the year, but if they didn't make the commissions necessary for them to satisfy that 10%, then they probably should be considered non-exempt and reclassified. But if you want to keep them at exempt and they satisfy all the other exemptions, you're going to need to cover them anyway. So it becomes a little bit of a self-defeating thing if you're using those incentives in order to garner some kind of performance and they fail to perform. You're still on the hook unless you want to have to go back and pay them overtime and any other time earned in the previous year.
And probably if you're in a situation like that where it's going to be cutting it close, my recommendation is to keep an eye on it. Look at it quarterly, so you're not, or every half a year or something like that, so that you're not caught off guard at the end of the year. Have those disciplinary conversations during the year. Hey, you're not meeting the performance expectations. We had budgeted that you were supposed to be getting X amount of commissions, but you're not doing that. That's a performance issue that you can talk to from a discipline standpoint. Stay on top of it so that you have an idea before you get to the year end and all of a sudden have to calculate it and try to figure out how many hours they worked and if there's overtime. It may be that if they work no overtime that it's cheaper to just get off that way, but you just have to, you're going to have to prove it in the long run. So, I would recommend staying on top of it, especially if anybody's going to be close like that.
Yep, I agree.
It actually looks like we have answered all questions.
Oh,
again,
yay.
If anybody does have a last-minute question that they want Paige or Claudia to answer, please send those in to me now. But Claudia, Paige, is there any last-minute reminders or takeaways that you want the audience members to be reminded of before we let you go?
On my part, I just think pay attention to those duties tests and remember you're only as safe as your last bad hire. Those are sort of my guiding principles. And if you're choosing between emailing me or emailing Paige, you probably have figured out already she's got the better answers. But try us both and we'd be happy to help in any way possible.
I would just say, we're at the beginning of December. You still have a few weeks to take a look at all of this, but don't wait too long, because if you do have employees that have to be changed, again, that communication is critical. When the last revisions, the DOL revisions, were released 15 years ago, the number of wage and hour lawsuits and complaints skyrocketed. There are a lot of attorneys who will advertise and will try to get disgruntled employees or former employees to file a lawsuit. And again, they can look either 2 or 3 years back. So it may not be somebody that you have right now. It may be somebody that it has left your group within the past 2 or 3 years. So you want to make sure that you communicate this, that you're as positive as possible. If you find that you've had a lot of misclassifications, we recommend consulting somebody, because there is going to be a strategy that you have to put in place. It's very easy to increase somebody's salary. Most people aren't going to complain about that. But if you're going to have to restructure somebody's duties or have them all of a sudden clock in and clock out, things like that, that really could cause some issues. So just be sure, whether it's us or somebody else that you trust, we hope that it's us, but anybody that you trust that can help you in this piece, we do think that it's important. That's why we do this.
Wonderful. Well, we didn't get any more questions, so I just want to thank everyone in the audience today for being able to join Paige and Claudia on their topic today, and I hope you all have a great rest of the day.
You too, and thank you so much, Emily, and thank you, SmithBucklin. Take care, everybody.
Absolutely. Bye.
Bye.
Bye.